Total stock of debt is estimated at $3.2 billion US at the end of June 2025, of which external debt is $1.8 billion and domestic debt the equivalent of $1.4 billion, which is 32.3 billion new loans. The budget performance in 2025, Mr. Speaker, honorable members, total domestic revenue collected during January to September 2025 amounted to 13.4 billion millions and is estimated to reach 17.9 billion millions, which will be 10.8 percentage points of GDP. Of the amount collected, income tax collected amounted to 5.1 billion millions, customs and excise duty, 2.9 billion millions, goods and services tax, 2.4 billion millions, mineral revenues, 1.1 billion millions, and the revenue collected by other government departments, including fisheries, royalties, parastatal dividend, treasury single account agencies, amounted to 1.8 billion millions. Road user charges amounted to 170 million millions, and the total grants received, mainly project grants, amounted to 2.8 billion millions. Speaker, honorable members, expenditure and net lending for January to September 2025 amounted to 21 billion millions, which is 12.7% of GDP, and is estimated to increase to 30 billion millions, which will be 18% of GDP for the year. Of this amount, wages and salaries amounted to 5.3 billion, goods and services 3.1 billion, subsidies and transfer, including transfer to local council, energy subsidies and grants to tertiary educational institutions, amounted to 2.2 billion millions. Total interest payments amounted to 5.6 billion, of which domestic interest was 5.3 billion. Speaker, honorable members, capital expenditure amounted to 4.8 billion, of which foreign funded capital expenditure was 3.7 billion. Domestically funded capital expenditure amounted to 1 billion millions. Mr. Speaker, honorable members, the overall deficit, including grants, is estimated at 5.2 billion, which is 3.1% of GDP at the end of September 2025, and is projected at 9 billion, 5.4% at the end of the year. Mr. Speaker, honorable members, the overall deficit will be around 8 billion, and it's projected to reach 12 billion for the year. Mr. Speaker, honorable members, the primary deficit moved into a surplus in 2025 as a result of our fiscal consolidation efforts. The domestic primary surplus is estimated at 1.4 billion at the end of September, and is projected to remain in surplus for the rest of the year. The medium-term outlook of the economy. Mr. Speaker, honorable members, the Sierra Leone economy is projected to remain resilient, with real GDP growth averaging 4.6% in the medium term. This will be supported by stable macroeconomic environment, expansion in agricultural activities, mining of iron ore and gold and rare earth minerals, as well as steady growth in service sectors. The inflation is projected to remain in single digits in the medium term, driven by prudent macroeconomic policy, relative stability of the currency combined with expected increase in food production and falling international prices of wood and fuel. The current account deficit, including official grants, is projected to improve to an average of 3% of GDP in the medium term, reflecting expected decrease in trade deficits, combined with increase in private transfers. Our gross reserve, foreign reserve of the Bank of Sierra Leone are programmed to gradually increase to 2 months of import cover by 2026, to an average of 3 months of import cover in the medium term, supported by disbursement for development partners and increase in our export receipts. The exchange rate will remain market determined and expected to move in line with difference between inflation in Sierra Leone and our major trading partners. However, the outlook is projected to certain downside risks, and these include intensification of protectionist policies, a deeper slowdown in the economies of our main trading partners, adverse terms of trade, external climate, extreme climate events, and declining aid flows. Mr. Speaker, honorable members, let me now proceed to policy proposals for achieving the objectives of the 2026 budget. The policy proposals to achieve the objective of 2026 budget. A. Domestic revenue mobilization. Mr. Speaker, honorable members, you will recall that the government did not introduce new taxes nor increase rates in the last 2 years. The government focused mainly on strengthening the tax administration to improve tax compliance. However, against the backdrop of global uncertainty, decline in foreign aid, and amidst expedition pressures, government fiscal position has remained tight. This situation requires government to raise sufficient revenues, domestic revenues, to finance its development priorities. To this end, the government will continue to implement medium-term revenue strategy together with other complementary innovative financial sources of financing the budget. The tax policy measures. Mr. Speaker, honorable members, tax policy measures are designed to protect the poor, support the local businesses, address environmental concerns, while raising revenue to invest more in social and economic sectors. These measures are expected to yield 1.5% of GDP in additional revenues by 2027 and improve the revenue effort to 11.8% of GDP in 2026. For the fiscal year 2026, the following tax policy measures will be introduced. 1. Expand scope of the minimum alternate tax to include all companies to effectively tackle income tax evasion and avoidance. Government will also abolish the investment allowance since businesses are already benefiting from accelerated depreciation of capital items. Both measures are projected to yield about 187.5 million in additional revenues. Restore the corporate income tax rate from its COVID-adjusted rate of 25% in the Finance Bill Act of 2020 to 30%. This aligns with the regional average and harmonizes with the top marginal personal income tax rate, and the restored rate is expected to yield 703 million new loans in additional revenues. Will harmonize the withholding tax rate on rental income with other capital income such as interest, dividend, and royalties at 15% consistent with the NTRS objectives. The measures will generate an estimated amount of 21 million new loans in additional revenues. 4. Raise the withholding tax rate on capital income and other payments to non-residents from 15 to 20% as a final tax. This will generate additional 199.7 million in projected revenues. 5th, will adjust and harmonize the excise duty on diesel and petrol to 5 leons per litre to maintain the real value of the excise revenue following the high inflation and depreciation of the leons in 2023 and 2024. Overall, these adjustments are expected to generate 971.4 million in additional revenues. These resources will be used to support social programs, including school feeding, free healthcare initiative, and cash transfer, especially to the aged. 6. Increase the excise tax rate on tobacco and tobacco products, especially cigarettes, from 2 leons to 3 leons per pack of 26 to effectively influence consumption behavior, internalize the social costs of consuming cigarettes while generating predictable revenues to fund specific health initiatives relating to the effect of these products. This measure is expected to yield an estimated amount of 187.5 million euros. We will restore, that's 7, we will restore the excise duty of 10 leons per 50 kilogram of packaged cement and cement products, which was suspended to cushion the effect of the global crisis and COVID pandemic on businesses and households. The measure is expected to generate an additional revenue of 207.7 million euros. We will raise the circulation levy to 500 leons and expand its scope to include other movable, mechanically powered vehicular objects such as cars, trucks, buses, and three-wheelers. Motorbikes will be subjected to an annual circulation level of 200 leons each per year. We will introduce a circulation level of $1,000 or $500 on commercial boats and vessels used as water taxis, industrial fishing vessels, or other similar vessels depending on their capacity as defined in the Finance Act 2026. The review of the annual circulation levy is aimed at protecting the environment, and this measure is expected to mobilize additional domestic revenue of 12 million euros. We'll rationalize the exemption from goods and services tax by restoring goods and service tax on certain high-end consumption items such as packaged and processed seafood, periodical and magazines, and other commercial and industrial supply of water. This policy is to broaden the tax base of the GST and increase government revenue, yielding an estimated revenue of 159.4 million euros. All other items consumed by the poor remain exempted from GST. We will continue to implement the full pass-through petroleum pricing formula to protect revenues from excise duties and other levies on fuel and from fluctuations in exchange rates and international price of fuel. To this end, government will maintain the excise duty rates legislated in the Finance Act 2026. We will increase import duties on imported tomato ketchup, tomato paste, Maggi, bottled water, eggs, plywood, wooden poles, and nails to 35%, consistent with the high band of ECOWAS recommended tariff on these commodities to promote our local industries and the production of import substitutes, and will exempt from the payment of GST and import duty LPG, liquid petroleum gas, liquefied petroleum gas, and its accessories, cooking stove, solar panels, and other home systems components consumed mainly by low-income households. This policy seeks to address environmental concerns and support the last mile initiative of penetrating renewable energy use in the country. Mr. Speaker, honorable members, tax administration measures. In addition to the tax policy measures, government through National Revenue Authority will also implement several tax administration reforms aimed at enhancing the efficiency in revenue administration and improve tax compliance. Government with support from our development partners will implement the following measures. 1. We will undertake a revenue administration governance and integrity assessment at the NRA to inform the design of measures aimed at closing the governance and compliance gap in revenue administration. 2. We will develop a compliance improvement plan for the extractive industries and large taxpayers consistent with the IMF framework. 3. We will modernize and operationalize custom procedures by introducing the electronic single window to improve the efficiency of custom administration and trade facilitation. 4. We will complete all activities of the Customs Revenue Enhancement Plan, including strengthening petroleum import valuation and control, and customs declaration and suspension regimes. We will conduct an audit of the Asikida systems in partnership with UNCTAD. This is to verify and align all customs and tax rates incorporated in the Asikida with the legally established national and regional provisions, correct for any discrepancies, and put in place safeguards against unauthorized changes. The audit will also focus on reconciling data from Asikida system with other systems. We will extend the application of tax stamps to cement, sugar, fertilizer, and containers of cooking oil. This will assist in providing reliable and accurate statistics on their production and importation, as well as deter smuggling, counterfeiting, misclassification, and misreporting. We will integrate the NRA existing data warehouse system with government digital platforms such as the online business registration, the e-procurement, and land information systems. Will enforce taxation of digital services through identification of cross-border digital service providers. Will ratify and implement a regulation on GST application on cross-border digital services. Will undertake a census of rented properties and landlords in Freetown to broaden the tax base and improve the collection of rental income. Will operationalize the revenue courts to speedily try tax defaulters. We will fully operationalize the newly established iron ore safe harbor framework for all mining companies and develop and implement a new performance management contract between the Ministry of Finance and the NRA to set out performance indicators and target aligned with revenue metrics, performance metrics, and the MTRS, but also monitor and evaluate evaluation mechanisms and reporting obligations and timelines and resource allocation for NRA. Innovative financing sources. Mr. Speaker, honorable members, In addition to strengthening the tax policy and administration, government will also explore non-traditional and innovative revenue streams to boost budgetary resources to sustainably finance our development priorities. Mining sector revenue. Mr. Speaker, honorable members, government is committed to enhancing revenue mobilization from our mineral resources. Sierra Leone total mineral exports amounted to $1.2 billion in 2024. Of this amount, government revenue from royalties and licenses amounted to $43.6 million, representing only 3.6% of the total value of mineral exports. The government's direct participation in the mineral sector, mining sector, is essential to rectify this imbalance and secure a more equitable distribution of the wealth generated by the sector. The Sierra Leone Mines and Mineral Development Management Corporation and the Mineral Wealth Fund are established to substantially increase financial returns to government through direct operation, equity participation, dividend and value addition while building multipurpose infrastructure and forging stronger economic linkages across all sectors. Mr. Speaker, honorable members, the Mineral Wealth Fund is now actively advancing its Onkorili North project, having secured crucial land lease agreements and the conditional license from NMA, the National Mineral Agency. And the fund is committed to investing in new mining, rail, and port facility with a projected first shipment of iron ore by the end of 2026. So, Speaker, honorable members, these institutions are operating on principles of transparency and sound governance in line with international best practice. These include the publication of corporation audit financial statements, adopting a transparent merit-based process for appointments of independent directors to its board, and implementing a robust performance framework for its management service provider. Mr. Speaker, honorable members, government will also insist that the fiscal terms of the Extractive Industry Revenue Act 2018 are upheld in the negotiation of new mining fiscal stabilization agreements and on renewal of existing agreements. Government will not submit to Parliament for ratification any concession that supersedes fiscal taxes or non-tax obligations prescribed in the EIRA for new mining operations or for